Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And today we got some juice, alright? We got some juice regarding XRP, but not only that, we have a lot of juice today. I honestly think if you're a crypto holder, you'll enjoy this entire video. And it's been a while since we've done a crypto news update rather than talking about the prices. So if you guys are interested or enjoying these videos, make sure you press that like button. I'm trying to get to 500 likes on this video, and it is easily possible if everybody presses that button. Having said that, the crypto market is in a very interesting spot right now. For all of you that do not know, Bitcoin had a pretty nice breakout, and there's a lot of signs which are showcasing that the bottom might be in. Having said that, right now Bitcoin got rejected at $20,000, and in my previous video, I went over all the different scenarios I can think of, look at that face right there, and how I think we could mostly place the best trade. But that also means there's not too much interesting to say about the charts right now. I mean, the Solana is up 4% and XRP is down 0.2%. Ethereum is up 4%, but really, it's not too special. What is more so special is a little piece of news I have for you guys regarding XRP. So if you're an XRP holder, you're most likely already pretty up to date with the Ripple versus SEC lawsuit. But if you're not, it's a lawsuit about whether or not XRP is a security. And if you know, I think the majority of you guys will know, but Grayscale is a very big fund and they basically offer these institutional clients some exposure to crypto through their funds. They had an XRP fund before, but they dissolved it or at least did something with it, not exactly 100% sure. But they also have funds on XLM, Chainlink, Bitcoin, Ether, and a couple of mixed funds and whatnot. However, every so often they have to file with the SEC. First of all, to get the fund approved, but also to, I guess, continue on proving that the fund is justified or whatever. And so recently, they filed another explanation as to why they should be able to hold XLM and why they should be able to have that fund open still. On its own, that's not a crazy thing. And actually, if they give some good explanations that it could have given with XRP too, I wouldn't really be sad here. I wouldn't really even making a video about it. But they did something really funny. And why, you'll notice in just a second. Stephen said here, the justifications, these funds, why their asset is different from XRP and should be approved by the SEC are getting pathetic. In their latest XLM filing, Grayscale claims transactions are the only function of the XRP ledger. Neither does it have a decentralized exchange, nor does it support tokenization. And so straight off the bat here, two things become very funny, all right? First of all, Stellar, and everything mostly surrounding XLM, is a derivative of XRP. Not in the literal form, but I guess no, in the physical form it is. So they basically had XRP in the XP ledger, and one of the co-founders of that decided to go away and basically copy most of it, which is not inherently bad. I mean, a lot of crypto projects are built upon other crypto projects or are a straight up copy of a good part of it. Some good examples were the beginnings of Tron, but even BNB, it very much copied Ethereum. And there's a lot of tokens out there, which again, it's not a really bad thing, but to then already put those two cryptos out of each other so much is interesting. However, it gets more interesting because for all of you that do not know, decentralized exchanges, what do you think had the first decentralized exchange? XRP Ledger. So it's kind of funny that it does not have a DEX, is what they say, or does not support tokenization. Not so sure where they got this from. So let's take a look, all right? They had their own filing here. Again, Grayscale, Stellar Lumens Trust, XLM. The date of this information is June 28th, 2022. So it was really around the corner about a week ago. Similar to XLM, XRP is a digital asset that is used to facilitate cross-currency payments quickly and efficiently. However, XRP's only function is to facilitate cross-currency transactions. Unlike the Stellar network, the Ripple network does not facilitate the creation of tokenized assets or offer a decentralized exchange platform, which makes absolutely no sense. It's kind of funny as well because I would have expected them to be like, oh, Ripple owns such a huge amount of it because, again, they also state McCaleb, one of the co-founders of Ripple Labs, which I think you shouldn't put in the letter then, but all right. The Stellar Development Foundation, also known as Stellar.org, oversaw the creation of all XLM in existence and, as a part of its custodial mandate, continues to oversee how the vast majority of the XLM are distributed. Initially, 100 billion XLM were created by the SDF and were required to be distributed as follows: 50% to individuals, 25% to partners such as businesses, governments, and institutions, or nonprofit organizations, 19% to Bitcoin holders, and 1% to XRP holders in a giveaway conducted in October 2016 and August 2017. 5% for the SDF operational expenses, and no further XLM could be created or distributed, yada yada yada. They then went to go on and burned a freaking ton of it, but it's funny that they write that little story, because it's hard for me to see exactly what now makes this then okay or fine. What exactly in this story would they all of a sudden look at and think, no, that's good, but then look at XRP and think, no, that's bad? And why would they say lies like this? It's literally on the SEC official website, by the way. It's not a joke. It's not a maybe thing. And again, even Matt Hamilton, ex-Ripple developer, or at least, he said, I wonder where Stellar got that functionality from. I really wonder who writes these reports. What a freaking clown I find as well, huh? My thoughts. I also got to make one thing really clear, right? This is a very important piece of crypto news. So what came out a little bit ago, and a lot of people are overlooking this, is that Sam Bankman-Fried said, oh, a lot of exchanges might be illiquid, take your money out. Well, it was a little bit over-reported, as what he was basically stating was, it wouldn't surprise me if some exchanges were having some troubles. And what I want to kind of respond to or explain to you guys is, I've said it a ton of times, take your money off of exchanges because, well, they might go on you. Whatever Sam Bankman-Fried said, I really don't give a crap about, to be honest with you, all right? He's a very wealthy man, but he's not in our realm anymore, all right? He's in a different realm with different priorities, different everything, all right? I worry about, let's say, $10,000. Sam Bankman-Fried doesn't notice the difference between $10,000 more or less, if you guys get what I'm trying to say. He cares about these things going bankrupt so he can buy them up, right? For a couple $100 million. Which, you know, for a man like me, is still not much, but just kidding. Having said that, a very important thing should be made clear. Not your keys, not your coins. Maybe write it down. Maybe tattoo it on your forehead. Or maybe if you, that would be kind of dumb. If you tattoo it on your own forehead, you're not going to see it. But you understand my drift, right? It is just always a philosophy you should hold strongly. If it's not your keys, if you don't have access to it at all times if you wanted to, it is not officially your money. Because if they go bankrupt, they keep your money and they sell it off to pay back to people who is owed to the most. And that probably ain't you. Then again, today over on Twitter, I actually shared with you guys as well that another exchange has now gone into this stage of, oh, let us hold these coins. And I even put out over on Twitter, it's very interesting that some crypto platforms are just deciding, hey, I'll keep your money because otherwise I'd be in trouble. And I honestly think that as of this point, a lot of these exchanges like Celsius, they could just go as easy as keep acquiring more money because deposits are usually open, but by paying off more loans and more loans because of that new money coming in or funded money from, for example, FTX, to get the major liquidation price as low as possible. And I mean, if nobody can withdraw until the bull market starts again, then at that point, they're going to make a huge amount of money off of everybody. So yeah, then they can pay everybody back. It's a shady practice, but it's pretty smart if you think about it. So it really makes me wonder, is there just really nothing we can do except for accepting that it's tickling our bums a little bit? And for some people, pretty severely? Sam is also putting up some more fear in the market. Miners struggle to raise capital, pay debt amid market rout. You know what's funny to me? How right now, if you look over on, I guess, any secondhand website, I guess, like eBay or whatever, you'll find that GPUs, wow, I had a little brain fart right there, are getting sold for such a lower price in comparison to, let's say, a year ago or so. It's such a crazy difference, the amount of sheer GPUs you could just buy right now. There's sometimes filings for 100 GPUs, for example, at once, where before you had to do such your best to find one because they would go for such a crazy premium. And indeed, it's funny how longer the crypto bear market lasts, the more things in that nature will also change, at least for the short term. All in all, though, guys, as you've probably noticed, adoption of crypto is just expanding like freaking crazy. Even in Mexico, we just had this news right here. Mexican senator proposes bill to make Bitcoin legal tender. And again, I don't have the numbers for you guys right now, but I believe the majority of big hedge fund owners also know there ain't no way they're not going to touch crypto. It's too lucrative. It's too potent. The potential, everybody can see it. And I think for most asset managers as well, the risk to reward is just so ridiculously high over longer periods of time that exposure to this asset class is just the best thing that people can do. Now, there's a difference between going all in like I am and just exposing yourself to it. But I think honestly, every single time you buy the prices which we're at right now, which are relatively very low, you're getting yourself a steal of a deal if you look over the next couple of years. I don't have the perfect chart open for it right now, but I think you guys can all agree with me here that Bitcoin relatively right now is at a crazy low spot. You can honestly take a look at it yourself and just kind of draw a line right here between the price from 2015 all the way up to now. It's literally only now in March of 2020 that we relatively got to prices this low. which is why I keep saying it's really a good deal for the long term. Even though we might dip lower, it's really possible. I've told you before, I even believe in some really big bottom scenarios, $12,000 or so. I would honestly not be too surprised if we actually do see something like that. As of this point, not really many things are showcasing that we're going to go way lower. Most signs are actually quite bullish. But I'm just giving you guys the idea here that right now, regardless of what happens in the near future, we have ourselves a pretty good deal. Having said that, we have a little piece of breaking news. Not so sure what this is about. I didn't read it fully just quite yet. Binance CEO raises alarm on Chinese data breach. Binance CEO ZZ alerted his Twitter followers of a data breach exposing sensitive data to some citizens yesterday. The attack compromised 1 billion residents' records, including detailed reports. Cybersecurity experts are concerned about the scale of the attack. That is very interesting. Apparently, it got sold over on the dark web, and it's 23 terabytes. Apparently, this guy was trying to sell it for only $200,000, which I personally don't think is a lot of money. For 1 billion people, right? Data from 1 billion people like that, if it's not yet published data, at least not to this degree, it's not a lot of money. And it's also crazy that Binance is going to this length that they have an entire threat intelligence section over in their company, which is just showing the sheer size of these companies nowadays, huh? So what they're saying is, where's this threat coming in? While hacks of DeFi protocols involved the theft of the funds, such as breaches that saw stolen funds from Ronin Bridge, from Axie, and Harmony's Horizon Bridge earlier, data leaks are more likely to threaten customers of centralized crypto exchanges, bringing us back to the point of take your freaking money off. Exchanges are required to collect know your customer information from new clients to combat money laundering and financing, which could be exposed on the dark web in the event of a security breach. In the case of this attack, an Australian security consultant said that it was possible that the hacker was exaggerating the scale of the attack. According to a 2021 report by Crystal Blockchain, US-based crypto companies had the highest number of attacks between 2011 and 2021, while attacks on the Chinese companies accounted for the most of the lost funds. Hackers try to steal funds from exchanges with minimal KYC requirements, such as phone number and email. What I'm thinking is the more info that they get about you, the more likely you're going to get targeted way more specifically. For example, if we take a look at some of my email accounts, I get so many tens or hundreds of email hack attempts a day, which was at the start fine. I mean, that was not too special. But all of a sudden, I started noticing, okay, there was another data breach for one specific email at that point. I have different emails for every single different thing I use nowadays because I ain't trying to have all this snowball effect, which is what I'm trying to explain. Eventually, they started to get more and more data I never filled on the internet before, never filled my own name, never filled my own birthday or whatever. But they start to gather this different pieces of data from different places as it was getting more and more paste on the internet. And all of a sudden, you start to see the emails become more and more targeted and look more authentic. Also, it's fun. I think it's kind of funny. If you look back at some of the old emails I've had, people use them for everything. Like, people use my email for Best Buy and stuff. Just as like a spammy email. They don't get to log in, obviously, but they use the email to put it in there, and I get the confirmation mail and whatnot. But maybe it's not really Best Buy. Maybe it's just a phishing email, but I don't really press anything. But yeah, that's honestly another little tip. If you're a crypto guy, make, like let's say a bucket full, like a dozen or two email addresses. I know it might sound frustrating, and so many people that I speak to don't get it. You're becoming such a big target. I guess with me, it's a little bit differently because I'm showing my face on the YouTubes, right? And I guess I can, in that sense, expect a lot more people to try. But that's also why I think I'm doing it overkill. I'm taking it to a very serious level. But even for you as a casual crypto holder, I honestly think the best thing to do is have different emails for different exchanges. Because the moment that your email gets breached, very often people lose everything in one fell swoop. And to prevent that, the easiest thing is just to have different emails. And of course, don't use the one email with the backup for another. But yeah, that's just a little personal tip for me. Let's go back at this one. Crypto likely to rally in coming months as traditional assets fall, says CEO of a $5.1 billion hedge fund. Patera Capital CEO Dan Moorhead believes crypto assets will diverge from traditional assets such as stocks, bonds, and real estate. I keep telling you guys this as well. Right now, crypto is too attached to stocks and everything, but eventually it'll change. Again, we're seeing such a clear difference in the way that Bitcoin is, I guess, utilized versus how it's supposed to be utilized, but also in the inflation. Just the sheer amount of quantitative easing they've done over in the US is a very, very big promotional piece for Bitcoin. There can only ever be 21 million, of which eventually more and more are going to get lost. So I'm not trying to say that eventually we'll go to one coin, but theoretically speaking, it should really go to nearly zero as time moves on, because if there's a maximum of 21 million, and on average, I'm not sure about this number, please don't quote it, 100 Bitcoin are lost every single week. Let's make it a little bit broader. Let's say 100,000 Bitcoin are lost every single year, which is pretty high, but it's just to prove a point a little bit, right? It might just be like, let's say 10,000 Bitcoin a year. Eventually, that 21 million is just going to trickle down of which, by the way, 1 million is in Satoshi's wallet, which might never be touched. Another couple million is already lost. Yeah, it really is not as overflowing as might seem. Really owning just one coin, I think, is a really big privilege. As long as you don't, get rid of it, I guess. Which is also my difference and a lot of other people's difference. I like to stack coins, not euros or dollars. One sector I'm really getting heavily into, by the way, as well, is these ISO 20022 coins. But I'll make a special video about that soon. There's a couple of cryptos that I honestly think are very, very smart to buy. They're right here. At least the top part of which I guess a couple of different coins in this list I think are very, very juicy to hold for a lot of reasons, which you'll see shortly in my next video that's coming out. But yeah, these cryptos right here in this list, it's just one thing that I'm preparing people for. A lot of these cryptos will have to go a very long way. What I mean with that is, we all know 99% of the cryptos will fail, right? But so I'm looking at the next 10 years, which cryptos will surely survive. And even though I'm a really big proponent for Bitcoin, I'm a really big fan of Ethereum as well. They just have the advantage that they're early, but not necessarily good. And so if we just exclude those two because they have their special privilege, just because they're old and the first to do something really revolutionary, and we can't really see the future for that reason. If we then just look at other coins which are out there, which don't have this privilege of being the first, so to speak, but are just really good, well, that's something that I want to focus on, right? And these ISO 20022 coins, they might be really in on something because they've thought about the future a little bit better than others. Again, this basically means they're intertwined with the banking system. It's just a really smart thing if you ask me. But again, a video about this is going to be online on my channel within a day, I think. So if you're excited for that video or want to know exactly why I'm buying these coins at what prices and what I'm thinking, make sure you press that like button on this video, and I'll see you guys again in another crypto video later today.